Good afternoon, everyone. It's Alyssa Corman, Justin Nielsen here, reporting to you live from our newsroom in Los Angeles with a look at the stock market today. And on today's show, we're going to be talking about HubSpot and Match Group, which have earnings due tomorrow.
Yes.
So potentially setting up heading into their reports, as well as breaking down the action for Acacia Communications. So we have a lot to get to, but first, let's talk about the major indexes. We did finish down across the board, the NASDAQ falling about 0.5%, but it also opened down 2%. So across the board, well off lows, and the Russell even reversing slightly higher for the day.
Right, and that's really the kind of takeaway for today's action is, it was down as much as 2.2%, and the fact that it only closed down 0.5%, there is a positive light there.
Right.
Of course, a lot of this was, instigated by a Trump tweet on trade. I think Jed Graham really kind of summed up the whole feeling on this that, Trump really needs the economy to do well, and the last thing he can do is, last thing he wants to do is just kind of put a bomb here and destroy the trade talks that could really have an effect on the economy. So Jed was making a very strong case that this might just be something that is people are realizing was kind of a shot across the bow, but not necessarily something that's going to end up being a long-term threat.
Right, threatening a hike in tariffs if an agreement wasn't reached. But it looks like investors' fears eased throughout the session a bit there as well. So we have a chart of the NASDAQ here, some nice support at that 8,000 level.
Yeah, we keep on talking about that 8,000 level. It keeps on coming up, and the market keeps on showing us why we're focused on that level. So support right there at 8,000. It got a little bit below there, and then it came right back. So overall, volume wasn't looking like it was tracking much higher, so we are probably going to avoid distribution. But even if we did get a distribution day, as far as distribution days go, it's not too bad when you have a close right there at the peak.
And what are we tracking now as far as distribution days? A little bit more clustering together than what we've seen in this rally so far?
Right, and last week we did have, kind of a cluster. We were almost threatening like back to back to back, and we didn't do that, but, we did have a lot of distribution. And that does kind of throw up the caution flags, but we still haven't gotten to that 5 or 6 level, in a 25-day window. So it's not, again, it's not time to panic at this point. And the fact that the Russell 2000 crossed that 1600 level, the fact that we're right there at new highs, there's a lot of positive stuff that's happening here that really, the distribution is not too big a concern right now.
All right, well, let's take a look at Match Group, which is setting up ahead of its earnings report Tuesday night. The stock closing up 1% for the day, so an upside reversal here. And we have analysts expecting sales to grow about 14%, while earnings pick up 27% after a 22% decline the prior quarter.
Right, so, with a lot of these earnings reports that come, we're still in the thick of earnings season. So you really have to look at, where did I buy this stock? How much cushion do I have going into earnings? If you don't have a lot of cushion, it's very hard to hold on to a stock because you don't know what's going to happen on that earnings report. If it misses a little bit, or it could even blow away estimates, but the guidance isn't great.
Right, exactly.
So there's a lot that can happen. Exactly. So usually, unless we have at least 5% or more, we usually kind of avoid it. Now, if you had bought Match back at $18 in September of 2017, that first breakout, then that's different. You've got a lot of cushion. But if you just bought it from this most recent breakout, you're not looking at a lot of cushion. 4% tops. It's right at the top of its buy range. You can see that on the MarketSmith chart here, where that blue range is the buy range from that pivot, the buy point. So it's still in that range, and that's a lot of risk to take on.
Which is why we talk about our earnings option strategy. So a potential options play here in lieu of owning the stock outright?
Yeah, at least with the option strategy, you do cap your risk. That's the big part about it. We're not trying to make a bunch of money on the option itself. It's more of a stock ownership strategy.
Right.
And Chris and I actually went over that in episode 7 of the podcast in pretty good detail. So that might be something you want to check out. In fact, if we turn over to HubSpot, HubSpot is one of the stocks that Chris and I talked about. And
Perfect.
It has earnings coming up tomorrow as well after the close.
That's right. While we're on the subject, just quickly, investors.com/podcast is where you can find all of the details. We have in-depth analysis of our earnings option strategy there. But speaking of HubSpot, we also have an upside reversal here today. It's holding within a buy range heading into this report. It had a consolidation, tried to break out, formed another base base again, match a little bit of a similar
very similar.
action there.
So, and we actually did a options play on leaderboard for this one. So we actually got it very close to that breakout, actually a little bit before. 180 call is what we chose, and with a May 17th expiration. And right now we're up on that option. We'll see what happens with the option tomorrow. Now, granted, we expect a little bit of the volatility to come down once that option, once the earnings is over. But what we're looking at is if it can hold above 180, and if it goes up significantly from there, then we're looking at a lot of intrinsic value to our option, and we can exercise that, and now we own the stock. That's the way that we like to play this.
All right. Well, a great strategy there, HubSpot. Looking like it's in prime position here, heading into the report with analysts expecting sales up about 29%, earnings up about 67%. So strong growth for HubSpot expected on the top and bottom.
And it's notable that this is in the software sector, which has been doing very well. It's been one of the best performing sectors. In fact, IGV, the software ETF, that actually closed pretty flat today. And so software was showing a lot of strength, even though the market was down significantly. So
very good point.
And both of these, you can look at those earnings breakaway gaps as well. You don't just have the option play, to look at. If this is something that pops up at the earnings, then you might look at a breakaway gap.
Well, two names that are definitely on our radar heading into earnings, so we'll have to see how they react tomorrow after the close. And let's, last but not least, take a look at Acacia Communications, which ended the day down about 5.5% after issuing its quarterly report. It was the guidance that is weighing on the stock here, a slightly above average decline, but punching below a key technical level today.
Right, so it did cross below the 50-day moving average. And a lot of times when we see a stock that goes below its 50-day moving average, we look at the volume, and the volume wasn't necessarily overwhelming on this, but a lot of times we also wait until the end of the week before we take action. Now, in Acacia's case, depending on where you got this, if you got it earlier, and maybe had that 20% profit, that's the green area, then, that's okay to take that 20% profit. That would have been hard to do because a lot of that gain came from
the last
earnings report. Yes, exactly. It came from the last earnings report, which was a breakaway gap.
And maybe if you had the option.
Yeah, maybe. So the fact is that we do have that cross below the 50-day moving average, and you also have some more group members reporting. So you have Fabrinet reporting after the close today. You have Lumentum, reporting before the open tomorrow.
So depending on their guidance, that could weigh on shares further.
Exactly. So there is, still risk there, and if nothing else, when you get this cross below the 50-day moving average, a lot of times it says, look, I'm going to need to consolidate a little bit more, and if you don't want to hold through that, and if you just want to take the gains you have, there's nothing wrong with that, taking profits right here.
That's right. That's why we always like to look at these moving averages, support levels that could turn into resistance levels, vice versa. So always key to keep those in mind. But a lot to look forward to this week. It sounds like it's going to be a busy week from trade to more earnings.
Yeah, so the big thing is, just kind of keep your head on straight, understand where we are in this move. We're up at new highs. We might pause a little bit. We don't have to necessarily blow these out and continue going as fast as we were going before. But so far, distribution is not too much of an issue, and we're holding pretty strong.
That's right, and a lot of growth stocks acting well.
Yes, so far so good.
All right, everyone. Thanks so much for watching today, and we hope you check out investors.com for all the latest stock market news and analysis. You can also check out our content across social media, whether that's on Facebook, Instagram, YouTube, or Twitter. So you can catch us live and look at all of our articles that we post across social.
Yeah.
All right, everyone. Thanks again for joining us, and we'll see you right back here tomorrow.